Good day, everyone. As I've promised that I'm going to provide you then with this recording of the second session of this chapter 8. You may remember then in the last video, this is then where we end with this question 8.2. So we will carry on from here, and this question then was for the integrated accounting system, but now we want to look at the question whereby then we're going to have interlocking accounting system. I've provided a question here that we're going to go through. It reads, Odegang Limited keeps separate ledger for its financial and cost transaction. During May 2018, the following transaction took place. You've got the transactions listed for us. This is the requirement. Enter the above transaction in the cost ledger, and you must note that it says in the cost ledger of Odegang Limited. Only the following ledger accounts are required. Then you have to do the material control account, wage control account, manufacturing overheads, and work in process. And now we are going to focus only now on the cost ledgers only. And understandable so, because if you look again in the heading, then you were told that this company, it keeps a separate ledger for its financial and cost transaction. So we'll focus on the cost side of doing things, and we only record for the cost transactions only, not for the financial side. So we'll focus also then to the transactions that affect the cost side. So that's what we're going to do when we do then our recording. Okay, let's open up then our writing pad. So then looking at the question here, then the question is named as tutorial 1. That's okay. You'll find then these questions then also then on your teams. If you look under your files, they are there. So we'll look at this tutorial 1, and if you read, then we are only required to open then our transactions. Let's go back and check material, wage, manufacturing overheads, work in process. So basically then we're going to open up then the production accounts. So here is our material control account. Right, then after that then we've got the wage control account. We also need then to open up then the manufacturing overheads. Lastly then we've got the work in process account. So these are the 4 accounts then that they said that let's focus on. But now you'll see then the change when we're using then the interlocking accounting system. Let's look at then the first transaction that we have. It is material purchase on credit. You've got 40,000 there of then the material that you've purchased on credit. If you check and try then to see about which accounts involved on that material purchase on credit, you'll see that then you've got then your accounts payables and your material account. So under normal circumstances, or if then we're using the integrated or the general principles of your financial accounting, you were going then to record then this to immaterial control account and your accounts payables. But because of the system that we are using, because then we are using here the interlocking accounting system. So instead of saying here then accounts payables, we'll simply use then the corresponding then or the linking account, which is financial ledger with that 40,000. But of course, again, because in this case they say that let's not open it, let's just focus on these 4 accounts. So we'll debit your material account and you credit your financial ledger. If then they were simply saying to us, then let's just do then the recordings of interlocking accounting system, we're going then to open up this financial ledger account so that we can have then the credit. So that's what we're going to do with that transaction. And the next transaction that we have, sorry for that, going back then to our information here, you've got a material issued to production, direct 25,000, indirect 7,000. So we know that with the direct one of 25,000, we come and credit here our material account, work in process. 25,000 come to your work in process, material 25,000. There's no issue then about this case because both of these then accounts are cost accounts. Hence then we've got then the right corresponding. We say work in process and your material. It's because these are cost accounts. And again then we've got indirect of 7,000 that will go then to your manufacturing overheads. That's 7,000. Then you debit your manufacturing overheads with material. Again, these are your cost accounts. That's 7,000. Then you're done with that transaction. Then direct material returns to supplier is 2,000. Back to storeroom is 500. So when we say that, then we transfer then from the storeroom then to the supplier, it means that it will go then back then to our creditor. So we'll come here. See down the change. Again, you use then the financial ledger for that 2,000. We cannot use then the accounts payables for that. Then, but the one then that is from or is transferred then to a storeroom, it means that it's from our work in process account. So we'll have then your material here, that 500. You come then here, you say work in process as your corresponding entry, that 500. Hope then that is clear. Then we move on then to the next transactions and that we have. Total of the factory payroll for the month is 40,000. Then they've indicated in brackets that 36,000 of this amount was in respect of direct labor. So it means that then the balance is your indirect labor. So your total of that payroll is at 40,000. So that means then it was going to be your bank account, but we will use financial ledger for then that total amount of 40,000. Then we come then to the side and say that okay, work in process for the direct one, which is equal to 36,000. We come then to your work in process account, which is account 36,000. And then you've got the indirect of that will go to your manufacturing overheads, which is going to be 4,000. Wages 4,000, it will go there. Then you'll finish then with that account. Next transaction, electricity, repairs and other factory overheads paid by check. Now look at that, because they say then these are factory overheads. So they have something then to do then with our factory. So we will take then that 13,000 total amount then to our manufacturing overheads and the bank account, because they are paid by a check. So you'll initially say that you've got a bank account involved, but remember then the system that you are using, so it will be financial ledger account, that 13,000. That's what you'll do. Then we're going then to have a credit on that financial ledger control account. Then absorbed manufacturing overheads for the month was 28,000. So that's what we're looking for. Remember, we said that to the working process in respect of your manufacturing overheads, you take then the absorbed amount. So working process, sorry for that, I thought it's my manufacturing overheads account, this one. So we come then here and say in our working process account, then this 28,000, the absorbed amount. Then your manufacturing overheads, 28,000. That's how you are going to do then your recording on that account. All right. Let's look then what's the next transaction we have. Cost of goods completed for the month at normal was 80,000. So once we say this is a cost of what we've completed, it means that then it will go then in our work in process account. Then to the finished goods. I'm sorry, I don't have enough space here. So this 80,000 will go in there. Then you'll debit your finished goods, but as per the instruction, they didn't ask us to open then that finished goods. Now they say that the under or over-absorbed overheads were adjusted against the cost of goods sold. So that takes us then to which account? Of course, then it will take us then to the manufacturing overheads, and we have then to calculate then that or do then the calculation on that manufacturing overheads and see our balance. To see if it's on which side, 7,000 plus then your 4,000 plus then your 13,000. So it's 24,000 on the debit side. So definitely then we are going to balance this account with 28,000, the one that appear on the credit side. So it means the cost of sales, the difference of 4,000. Remember, we said that the minute you debit your manufacturing overheads and you are going to credit your cost of sales, that indicates that you have an over allocated amount. So this is an over allocated amount. So that 4,000. So we dealt with that. So we don't need then to open a cost of sales. And again, cost of sales, remember, is part of your cost accounts. Hence, then our corresponding entry there was a cost of sales, not financial ledger accounts. Cash received from debtors, 90,000. Then it does not affect us on the cost side. Discount allowed. Then there's nothing then that we are going to do about that. Advertising cost paid by check. Again, there is nothing then that we are going to do about that. And again, because they say, now let's just enter then the transaction in the cost ledger, and only that is account. So we're done. So that's what you'll do then if then the company is using the interlocking accounting system. So this is what you have to then to do on that. I don't know about what happens here, but I was saving then my material. Right, so then this is how then it looks, and then you've got your financial ledger. So instead of having your creditors, you simply substitute with that financial ledger. Instead of then having your bank, then you simply use a financial ledger. So in any account that you see that it belongs then to that side, then you simply use then that financial ledger control account. So that's all then what we need then to know when it comes then to the interlocking accounting system. You see then these systems, and I'm still messing up with them. Alright, that's all. So now that you've noticed that, guys, and there are transactions that we haven't do anything about them, you discount allowed, and then on the financial side, they are going to make then the record then about those transactions. At the end of the day, when we look then at the net profit or loss, then you'll find that then there are some discrepancies. So if then you've got those discrepancies, you need then to do the reconciliation. You need then to reconcile the difference that you have then on your cost and financial accounts. So although then in essence then you are supposed then to have the same net profit in both sets of the books, but it happens that then you've got the differences that needs you then to do the reconciliation. These are the reasons why then we've got those differences. Sometimes you may find that you've got the items that appear only in the financial accounts, then items that appear only in the cost accounts, and also items for which then the method of accounting in the cost and financial records are different. That then again requires us then to do the reconciliation. Here are some of the items that can only appear in the financial accounts. Then the bad debts, then a loan and the overdraft, you've got a profit or a loss, then when you are selling then your asset or realizing then of investment, interest and dividends received, other sundry items such as damage paid or received, and also then the fines that are paid, company taxation, dividends paid out, and also transferred then to reserves and the provision. So looking at these transactions, you will see that they only affect the financial side. They have nothing to do with the cost side. Also, you can have then some items that appear only in the cost side, like your interest on capital, and also then internal charges for then the rent. Also then the items for which then the method of accounting differs then in the cost and financial records. If then we look at the abnormal losses in production and storage, differences in the valuation of inventory, and also differences in depreciation, so then we need then to do the reconciliation if then we've got such differences. Excuse me. So I just decided then to pull up then this tutorial then the number 4. As you can see, if you go and check it, your tutorial questions. Now, I think then you've got only 3 questions there. So then this is the 4th one. So I decided to name is that our tutorial number 4 so that you are not going to be confused. Peretrao Limited keeps separate books for its cost and financial records. The net income showed in the financial accounts for the past year was 18,592, whilst a net income of 20,496 was recorded in the cost accounts. A comparison of the 2 sets of accounts revealed the following. So in this case, then they have made our lives then easy, I will say, by not providing us then with the whole information. So instead then they just decided then to say, okay, look, then we're going to give you now the net profit, and then you have then to do the reconciliation of then those net profit, and then they show us, okay, now these are the values, and that differs when we look at these 2 income statements, because at the end of the day, guys, then what we are reconciling here, we are reconciling the profit. So it means that then what you need then to keep on questioning yourself, then now that you've got this difference or discrepancy that you have, the question will be, how does this difference then influence then the profit that you are reconciling? Then you'll be able then to place that in a correct manner. So we've got first then the inventory valuation. So we find that then we've got the differences firstly on the inventory valuation. Raw materials, opening inventory, looking at the cost accounts, then we've got 6,821, whereas in the financial accounts is 7,259. Closing inventory, cost accounts, it shows 5,483, and in your financials you've got 5,128. Then the finished goods, again you've got some differences there. Then the following transactions were not recorded in the cost accounts: dividends and interest received, because then they were affecting only the financial side. Loss on sale of milling machine, 1,750. Again, that was a financial record. Then the requirement is to reconcile the net income figure as shown in the sets of accounts. So we need then to do then the reconciliation. So when we do then our reconciliation, we open up, then I will say that in the 4-column statement. When we do then our reconciliation, so this is your tutorial number 4, which is then the reconciliation. So we said that, okay, now we've gotten the details. Then you've got your cost, you've got your financial, then you've got the difference and the total column. So then these are the columns that you've opened, guys, when we do this reconciliation. You made then your own choice. You can start then with the net profit as per. If financial, then the results then will be the profit of then the cost. Or you can start then with the net profit of the cost, and you'll end up then having a profit of the financial. So net profit So we take then the net profit of the financial. They've shown us as 18,592. If you can go back to the question, 18,592, that's the profit that you have. So our task now is to take this 18,592 and make it equal to 20,496, which is then the profit that we have on our own record. So we will look then, guys, about what we need to add and what we need then to deduct. By the look of things, then you may think that it's a matter of adding, because 18,000 is less than 20,000. But sometimes you may find that no, there are things that we need then to deduct as well. So we'll have then to look at that. Now we'll start then with the raw material. Opening inventory is 6,821, and you've got 7,259. So looking at that, we've got 7,259, then we minus 6,821. So we've got a difference here of 438. Now we need then to know about, are we going then to add, or are we going to deduct then this 438? How are we going then to be sure, okay, now what are we going to do about this 438? You need then, guys, then to have then your workings. In your workings is whereby then you'll go a little bit back then with to the income statement. Just draw then your mini income statement so that you can see, okay, how does these figures then influence then the net profit. So you've got your cost side and you've got your financial. These are then your workings. To determine now, guys, okay, how does this amount affected, these differences affected your profit. So basically your income statement start then with sales. Let's just then assume that our sales was 10,000 rands on both sides. Then minus cost of sales. Now try then to come up then with your own figures, guys, and let this opening inventory then be the only figure then that is differ. So we've got then the opening plus the This is cost accounting. The production minus closing. So in this case, we've got an opening then in the cost side of 6,821. Whereas then the financial guys then they've got to 7,250. Excuse me, 259. Then the production, let's say that we've got then the same production. Let's put it at 10,000. 10,000, right? And the closing 8,000. In this case, let's just simply assume, guys, that we don't have any other cost or income. So it means then your gross profit will be as well as your net profit. So this is how then we are going to assist yourself, guys, and then to determine, to see if then this difference that you have, then how does it influences then your profit. What are you going to do? Are you going to add? Are you going to minus? So 6,821, then you plus then your 10,000 and say minus 8,000. Then it means that this side then our cost of sales is going to be 8,821, right? Come then to the other side, 7,259 plus and the 10,000 minus 8,000. Then this side then is going to be 9,259. Then that makes you to have a profit of 741. But when you come then to this side, the cost side, you've got 10,000 minus 8,821. Your profit here is 1,179. You can check the difference. 741. Can you see again that 438? But that's the difference that we're looking for. Now, this is what you are doing. If you can go and check again how we draw up our reconciliation. We started then with the net profit according to financial. So we say we are taking 18,592. We want to make it then to be equal to a profit here to of a cost. So you simply then do the same thing then again in these workings of yours and say that, okay, in essence, this is a profit that I want to take it and to make it to be equal to this one. So you take 741 and you want to make it to be equal to 1,179. So the question, what are you going to do? Are you going to add or are you going to minus? Now you've got an answer. Okay, then I'm going then to add. So you've got your difference in inventory, raw material. So under your cost, you've got 6,821. Then here you've got 7,259. And your difference is 438. So we know that 438 we are going to add to 18,592. I know then it will twist your minds a little bit, but rest assured then, guys, at the end of the day you are going to master this. I trust that. Now we come then to the closing. Our closing is 5,483 on the cost side, and then your closing is showing 5,128. So again you've got a difference here of 355. Now, what are we going to do about this 355? Are we going to add? Are we going to minus? We are not going to thumbsuck that. So we need to go again and redo then just do then our workings. So we come then to these workings of ours and just redo again the solution here. I'll suggest that let's assume that in this case, guys, we don't have the opening at all, just to make our calculation simple as possible. So then your closing is going to be 5,000 here, 483. And this side you've got to 5,128. Let me go and check again. Oh yes, 5,580, 5,128, right. Alright, then we don't have opening, so it's going to be 10. It's going to be that 10,000, then minus the 5,483. So our cost of sales is 4,517. On the other side, 10,000 minus 5,128. That's going to be 4,872. Then I will simply calculate our profits. So you ended up having a profit of 5,128. And this side is 5,483. Alright. This is again, your difference again is going to be that same figure of 355, right? So the question again that you have, are you going to add, are you going to minus the 355? Remember again the same principle, guys. We want to take then the profit that we have on the financial side and make it equal then to the one that we have on the cost side. So you've got here 5,128. They are saying to you now make it equal to 5,483. What are you going to do? Now you've got an answer. Oh, okay. Again the difference in inventory, raw material, closing, this was your opening. Again, we are going to add again that amount, 5,483, 5,128, then you've got a difference of 355. So that's what we've done then with the raw material. We come then to the finished goods. Same thing, guys, and don't confuse yourself when you said, okay, they say raw material, they say finished goods. Just go then to the income statement and do then the reconciliation. Finished goods opening inventory is 14,491. Then on the other side is 14,105. One I will simply guess and say, okay, now let me compare then with this, what was our opening in our raw material. The opening then on the cost side, then it was less than the one of the financial, so we ended up adding, but in this case the opening then in the finished goods is more than the one of financial side. Therefore it means that we are going then to minus that one. If you guess like that, then you are correct, but I'm going to show that then again by doing a test. So let's test again that, so that we can see that really then our guess is correct or not. Let's see. Again, let's keep then the other figures as they are. So our opening now is going to be this 14,491, and on this side then you've got 14,105. The closing, I think then we need then to have a closing. Let's just simply say that our closing is 12,000 on both sides. Remember then this 12,000, I have not taken it anywhere. It's a figure then that I just made up. You will simply do that as well. Plus 10,000, then minus 12,000. Ooh. Okay, I wanted then to us to have a profit. It has to be a profit, not a loss. Let's change then this 12,000. Let's make then our closing to be, let's say our closing is 14,000. Yeah. 14,491 plus then your 10,000, then you simply minus your 14,000. Once again. Okay, so it gives us 10,491. Then this side 14,105. So it's going to be 10,105. Let's do this, guys, and so that, because at the end of the day, I need Asana to have a profit. Let's say our sales are sitting at 12,000. So it's going to be 12,000, then our minus to 10,491. Then that will give us 1,509. 12,000 minus 10,105. 1,895. So then, guys, then the key values here was your opening. So don't mind then about all other figures, but where did I got then those figures? I've made up, guys, because I just wanted them to test. But now that we've got then these two figures of then our openings, 14,491 in the cost side and 14,105 on the financial side, how does those two figures influences then the profit? Now this is then the reality. Now we see that, okay, at the end of the day, because of then those two differences, then the net profit as per the financial records is more than the one of a cost accounting. So if you've been asked then to take this profit and make it equal to this one, what are you going to do? So you'll do then the deduction. So you need then to minus. So that's what then you'll do. So you need another column there to do your deduction. So you've got your opening, inventory of finished goods, 14,491, the 14,105, 386. We're going to deduct that. Right, I hope then that's making sense. Then the next one is closing inventory, 12,130 and 11,831. This one, guys, is similar then to the closing inventory of the raw material. In your cost side, you've got 5,481, which was greater than the one of financial records, and we've added that amount. So you'll do then the same thing again. You are going then to add that one. So there's no need then to go again and do then the calculation. So again you say, okay, I've got a difference in closing finished goods. You have 12,130 and 11,831. But if you want to go and test, guys, you can go and test. You'll see that it's going to show you that, but you need then to add this amount. That's what you have to do. So we finished then with the inventory, and that's the only challenging part. If you've managed, guys, then to master this one, then you won't have any problem, I promise you. Then they said the following transactions were not recorded in the cost accounts: dividends and interest received, 550 52. So this was not recorded in the financial accounts. So it was recorded only, it was not recorded in the cost accounts, I'm sorry. Not in the cost accounts, but it only appears in the financial accounts. And they are saying to you, take this financial accounts, make it equal to the cost accounts. So it means that what we're going to do, what they've added and we didn't add, then we have to take it out again. So we need then to deduct again these dividends and interest because they are already in that 18,000. So because we don't have this on the cost account, so we need then to take it out. So you've got those dividends and interest. We have not recorded anything in your cost accounts, and on the financials they have recorded 552. Therefore the difference is 552. That's what we're going to deduct from that 18,000 because this figure was already added there. Then the next one is a loss on sale of milling machine. 1,750. So this is a loss. So what they've done at the financial accounts, they've recorded this as an expense and it reduces their profit. So it means that we need then to add that one back, so to speak, because we don't have it on our side. So we said, okay, you've got a minus that we didn't minus. So let's add that one back so that you have zero balance also. Loss on sale. Nothing then on the cost, and they've got 1,750 on this side, 1,750. That's it. Then we're going to add, say the total amount that we're going to add to 18,000 is equal to 2,842. That brings us then to 21,434. And what we're going to deduct is 938. That will take us then to 20,496, which is profit as per cost. So then you've managed then to do the reconciliation. If you can go and check this profit, 20,496. There is the 20,496. We managed then to do the reconciliation of that. So that's how then you do then the reconciliation. When it comes to the inventory, just go guys and do that mini income statement as I've shown you here. If you've done now these workings, then you'll never go wrong. Then the others, then they need your own analysis. Make sure that again, which profit then did you started with. If you started then with financial, it means that then you want to adjust that profit to be equal to the one of cost. Or if you started with a cost, then you want to adjust it to be equal to the one of financial. So in other words, all what you've added, you are going to deduct, and all what you've deducted, you are going to add. In that case, then you are going to have the amount. So that's it. Thank you guys, and this brings us then to the end of our second chapter. So I'm going to post then for you again some few questions on how to do the reconciliation. You are going to do that one, and I'll also provide then one extra video then on the reconciliation part. And I think then by doing so, you will be all fine on how to do then the reconciliation. Thank you for watching the video.